Hi traders, Nathan Bray here from ACY Securities. Well, during a time of a geopolitical now crisis that we've got developing around the world after incidents and military actions in Israel, being described by mainstream media as the new 9/11. So yes, we've got ourselves a problem, and folks, my heart goes out to all the people affected by this crisis, both what's happened and how this could develop moving forward. So I think in periods of geopolitical crisis, we need to just first of all take stock. We need to say, okay, where are we at? What's happened? And then what am I looking for developments to make changes or decisions about global markets. So to start off with, I want to go back, last Friday, before this incident broke out with missiles flying everywhere in Israel. And I want to look at where we were at globally, economically. So the situation we had is liquidity was starting to dry up pretty rapidly around the world. How could we tell? Well, we could see stocks selling off pretty rapidly over the previous few weeks. We saw even other assets like gold, silver, precious metals, commodities were all selling off pretty rapidly at the same time. But the key indicator and the biggest market that I look at is the debt market. So I'm looking at something like the 10-year yield, and I'm seeing that in order to attract buyers, to buy bonds, countries around the world, in this case the United States, they had to keep offering higher interest rates to attract buyers, to provide that liquidity, not only to run their own country, but also to keep markets in effect juiced up. That was all starting to disappear. The liquidity was leaving the market, and we also saw that global economies were shrinking. Bad news coming out around the world, Interest rates were even starting to be paused around the world. So things weren't looking good. Now, one thing that can really provide liquidity, to the global markets is a crisis. As long-term trend forecaster Gerald Celente has stated, when all else fails, folks, they take you to war. So you can imagine the cost of war. And in the past, and I'm going off previous military events, they cost a lot of money. So it can provide an option for central banks to decide to provide quantitative easing in the form of bond purchasing. So putting all this created money back into the markets. Previous crisis, we saw it with the Ukrainian crisis. A lot of money started to flow back and be sent and created back into the global economy. Of course, crisis such as COVID, that's where we're in this scenario, aren't we, at the moment? We've got all this inflation created by all that extra money stimulus that entered the global economy. Well, now it's starting to dry up, There's nothing like another crisis, one that we happen to be seeing right now over the last few days, to make it more attractive for central banks to continue to pour this money in, and that's what I'll be looking at. So the question is, what sort of changes am I looking at, and how can I judge them? So in this case, I'm looking at, say, the 10-year yield. At the moment, this 10-year yield, as I mentioned, it's been going up and up and up from 4%, 4.2, 4.4, all the way up to 4.8. And it's not that it went up, it's the fact that it did it quite rapidly, which was quite scary. So what I'm going to be looking for is for that to pull back, which it already has over the last couple of days, and to stabilize, I want to see the move pull back and not rise rapidly again. To me, that could be a good sign that we are getting some liquidity back into the global markets. The other thing is the US dollar index. So this US dollar index, I want to see if the trend is going to continue higher and the US dollar is going to maintain its current strength. I want to see it hold above this 105.66 to 105.87. That's the level for me to suggest that this US dollar has just corrected, but the trend hasn't changed. So if we get changed in those two areas, then I think we have to start to rethink the way the market is going. If we end up with this conflict going on in the Ukraine and now a new conflict potentially developing in Israel, to me, they could be major changes in market conditions. And they're the two measures I'm using. Think about it this way. A month ago, I painted a picture for you suggesting that we now have BRICS versus NATO. And it was like a Rocky IV movie I used as an example. Why? Because we had the oil players such as Iran and Saudi Arabia suddenly becoming new members of the BRICS countries involving Russia and China, okay? The big populous countries around the world with lots of commodities versus, okay, the big other nations like Great Britain, Europe, we had the USA and of course Israel. So we now have this scenario where we've got, once the oil starts to sell off quite rapidly, we now have a scenario where gold is also selling off, and Iran, and we've got the other BRICS nations making comments about the NATO nations. And in fact, there is a declaration here of war, and there is support by the President of the United States. Even our own Prime Minister, Albanese, coming out to support one side and other nations supporting the other. So this prediction we had about a month or so ago is literally scarily coming to fruition, folks. So keep an eye on that 10-year yield. Keep an eye on this US dollar index. And remember, folks, from the heart, love you all. Let's try and bring back some stability and peace and love on earth. That's all from me, folks. Good luck with your trading.